That's quite as convinced, Tacha, does advertising convince others that aren't in the choir?
Yeah, I mean, I think it's certainly the point that everyone is harping on here. I think generally it's not a bad idea to at least try advertising, right? I mean, from our research, we know that on both a sticker price basis now and a total cost of ownership basis, EVs are better cars, right? They're cheaper, they're more performant. If you're not buying an electric vehicle, the question is why? Maybe, that information just hasn't reached you yet. Maybe an ad will. So I don't think it's a bad idea there.
Tesla is about to do something it's never done before, and several Tesla investors and analysts are talking about it. Find out the automaker's latest move to drive more demand for its cars.
Tesla held its AGM late in our time last night, and shareholders were looking for some reassurance about him being spread too thinly across his many interests, namely Twitter, SpaceX, and of course Tesla. And he partly already reassured them by appointing a CEO to Twitter, but he's going to remain quite hands-on there by remaining in an executive chairman position. And then on another point where investors are always looking for a bit of a process, is succession planning. There was one motion to get a public plan for that, to which Musk only replied that he had no intention of stepping down anytime soon as CEO.
So how significant is the decision on advertising?
Yeah, it's a big shift for the company, but it also tells us that the story of where Tesla is at these days. They've become a mainstream car company. They are set to make some 1.8 million cars this year, if all goes according to plan. That's just a little bit less than BMW for context. At the same time, there's a lot more competition these days for EV buyers. And so far, Tesla has relied on word of mouth and, of course, Musk's larger-than-life persona, namely on Twitter. But now markets are weakening. Tesla has already cut prices massively on its vehicles. So this really does appear to be the next logical step. And of course, it's going to be really interesting what kind of advertising they go for.
Tesla CEO Elon Musk recently announced that the car company would try advertising for its products. The Tesla executive disclosed this during Tesla's recent shareholders meeting, stating that the car company will be giving room for advertising, something it's never done in all of its years as a company. According to analysts like ARK Invest, Tacha Keeney, this could be a positive move for Tesla going forward. Hey guys, welcome back to Tesla Tomorrow. Musk's recent announcement marks a significant change for Tesla, a company that has previously shunned advertisements. Musk's announcement marks a significant change for Tesla, a company that has previously shunned advertisements. In its 20-year history, Tesla has actually avoided running any kind of standard paid advertising in preference of relying on the support of consumers and supporters to promote its own brand. Historically, Tesla has avoided the concept of advertising. The company chose to save money by not putting out TV ads, billboards, or online ads in order to push its products to consumers. Even Tesla's own CEO Elon Musk had previously stated that he hated advertising, and the cash saved was instead poured into product development and other areas of business. Now that Tesla has finally decided to opt for the option of advertising, what could this mean for the car company? More details to come in this video. But before we start, if you like this type of content, hit that like button, subscribe to the channel, and turn on notifications to keep up to date on everything going on with Tesla. Tesla has worked a no advertising strategy, and this strategy has worked well for the company, which was finding customers for every vehicle it could by simply building up a reputation and helping that grow through word of mouth. Tesla even famously refuses to run a PR department, essentially making it uncontactable for press inquiries. Interestingly, Tesla has finally decided to look in the way of advertising. In answer to a query from an investor during the shareholders event, Musk said, "Tesla is highly dependent on advertising, so here I am, never really used advertising before, and now have a company that's highly dependent on advertising. Advertising is fantastic, so everyone should do it, I suppose. You advertise cars not just for the next 12 months of demand, but quite literally for a lifetime beyond that point." According to Musk, advertising may focus on some of the unique and innovative features of Tesla's vehicles that the broader public may not be aware of. Musk also indicated that the brand's advertising should be informative and entertaining, with a higher focus on actual content than with other brands. While this could be great news, it's also a reminder that Tesla's EV sales may be waning. In an effort to remain ahead of its competitors, the company, which in April reported its lowest quarterly gross margins in 2 years, lowered prices in the USA and China. Tesla's actions were justified by Musk at the time, who said it's better to shift a large number of cars at lower margin and harvest that margin in the future as the car company perfects autonomy. Tesla was one of the biggest players in the EV market, with a range of luxury vehicles largely unparalleled by other automakers. Word of mouth and the company's shining image was enough to sell cars in bulk with virtually no marketing effort. Now, with sales flattening, the automaker is still contemplating actually running some ads. Multiple drastic price cuts have failed to ignite Tesla's sales in the way executives might have hoped for. While other automakers are starting to shift EVs in real numbers, although the company took the top spot in US luxury car sales in the last quarter, well, it still faced a flattening sales curve, with Q1 2023's production just barely ahead of Q4 last year. Given the huge entry of new EVs on the market, it's not surprising Tesla is starting to feel the heat. Its cars are no longer the only option, particularly given that the company's models are starting to become obsolete. Now faced with real competition, it looks like Tesla will start battling it out for market share. Last year, Tesla vehicles were in high demand, but amidst macroeconomic changes in the production of electric vehicles, as well as stronger numbers showing from competitors, the company may finally stand to benefit from advertising. Concerns about weakening demand for Tesla, especially in China, the company's second biggest market, have contributed to a nearly 70% drop in the company's share price over the past year. Tesla offered price cuts in the United States last year to juice demand, and this year again, it slashed prices in China for the second time as competition there continues to mount. Fortunately, Tesla still has some advantages over its rivals. It has established a large EV production footprint, with 4 plants globally, while many competitors are still building their manufacturing capacity. Tesla cars are doing incredibly well in their markets. According to Tesla, the Model Y was the best-selling passenger vehicle on Earth in the first quarter of the year. The Model Y was the best-selling non-pickup truck in the USA in the first quarter, the best-selling SUV in China in the first quarter, and also the best-selling vehicle of any kind in Europe in the first quarter. With Tesla production and sales expected to grow throughout the year, it's going to be tough for any other automobile to catch up the Tesla model. The Model Y has consistently been the top of the sales in the 3 biggest automobile markets in the world, and this has led the Model Y climbing 3 spots to number 1 globally, with more than 263,000 sales to open the year. Tesla Model 3 has also been quite impressive. The Tesla model has annihilated its ICE counterparts. In a new reliability study from Germany, a new study from a German vehicle analysis firm, the ADAC, highlighted the reliability advantage, finding that the Tesla Model 3 beat out the vast majority of its gas-powered competition. The ADAC study, which primarily focuses on vehicle breakdowns, is an annual study for vehicles that are over 3 years of age, and it now includes 4 electric vehicles sold in the German market. Those vehicle models include the Tesla Model 3, BMW i3, Volkswagen ID3, and the Renault Zoe. According to the ADAC's data, electric vehicles not only lead their gas counterparts on average, but the Tesla Model 3 beats both gas vehicles and EVs in average reliability by a pretty staggering margin. Thanks to the incredible mechanical simplicity of electric vehicles, it should come as little surprise that EVs are, on average, significantly more reliable than their fossil-fueled powered counterparts. Tesla is also making a deep dive into artificial intelligence. In November 2021, Cathie Wood described AI as the next big frontier for the tech sector. Arca believes that AI and its technologies can together provide exponential growth into the future of the global economy. The firm predicted that AI training cost reductions continued at an annual rate of 70%. To put that whole thing into perspective, the cost to train a large language model to GPT-3 level performance dropped to $450,000 in 2022, after being nearly $4.6 million in 2020. According to Wood, her firm has been working on AI for a long time now, and she thinks some of the things that are seen now are just the beginning of the impacts that artificial intelligence is going to have on every sector, every industry, and every company. In Wood's 2023 Big Ideas report, the investment expert stated that the market value of disruptive innovation platforms could scale 40% at an annual rate during this business cycle, from $13 trillion today to $200 trillion by 2030. Wood further stated in the report that in 2030, the market value associated with disruptive innovation could account for the majority of the global equity market capitalization. AI is creating explosive demand for training data, and ARC estimates that the cost of training an AI model with 57 times more parameters and 720 times more tokens than GPT-3 would fall from $17 billion today to just $600,000 by 2030. ARC's report stated that winners in AI are companies with high-quality, domain-specific AI training data across vertical applications. It also stated that better and more specific data results in improved AI models, which gives rise to better products and thus affects more customers. ARC's prediction is that at 100% adoption, AI could raise global productivity by around $200 trillion, compared to the $32 trillion in total knowledge worker salaries. Cathie Wood is one with the opinion that AI is going to converge with everything, blurring lines between sectors and causing companies to cross over into each other's sectors. While Tesla's path to advertising may not be clear at the moment, it sure does have the potential to turn in more demand for the automaker. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.